Welcome, everyone. Today we are looking at Topic 5 in your SS2 accounting series, Manufacturing Accounts. This is a very important and advanced topic. Manufacturing accounts are prepared by businesses that produce goods. They show the cost of manufacturing goods. This topic is common in essay questions. You must understand the components of manufacturing accounts and how to prepare them. Pay close attention. Let us begin. First, let me explain what manufacturing accounts are. Manufacturing accounts are financial statements prepared by manufacturing businesses. They show the cost of producing goods. They are prepared in addition to the trading account, profit and loss account, and balance sheet. The manufacturing account calculates the cost of goods manufactured. This is also called the cost of production. The cost of goods manufactured is then transferred to the trading account. Manufacturing accounts are important for businesses that make products rather than just buying and selling them. Understanding manufacturing accounts is essential for advanced accounting. This is a key concept. Now, let me explain the purpose of manufacturing accounts. Manufacturing accounts serve several important purposes. The first purpose is to calculate the cost of production. This is the cost of manufacturing goods. The second purpose is to control costs. It helps to identify areas where costs can be reduced. The third purpose is to determine the selling price. It provides information for pricing decisions. The fourth purpose is to value inventory. It provides information for valuing finished goods. The fifth purpose is to prepare financial statements. It provides information for the trading account. The sixth purpose is to make decisions. It provides information for management. Understanding the purpose of manufacturing accounts is essential for understanding why they are prepared. This is frequently tested. Now, let me explain the components of manufacturing accounts. Manufacturing accounts have several components. The first component is prime cost. This is the cost of direct materials, direct labor, and direct expenses. The second component is factory overheads. These are indirect costs incurred in the factory. Examples include factory rent, factory lighting, factory insurance, and depreciation of factory machinery. The third component is work in progress. This is the value of partially completed goods. The fourth component is the cost of goods manufactured. This is the total cost of producing finished goods. The fifth component is the trading account. This is where the cost of goods manufactured is transferred. Understanding these components is essential for preparing manufacturing accounts. This is frequently tested. Now, let me explain the format of a manufacturing account. The manufacturing account has a specific format. It has a debit side and a credit side. The debit side records all costs incurred in manufacturing. The debit side includes direct materials, direct labor, direct expenses, factory overheads, and opening work in progress. The credit side records the closing work in progress and the cost of goods manufactured. The difference between the two sides is the cost of goods manufactured. The cost of goods manufactured is then transferred to the credit side of the trading account. The format is important for preparing the account correctly. You must know which items go on the debit side and which go on the credit side. Understanding the format is essential for preparing manufacturing accounts. This is a practical skill. Now, let me explain direct materials. Direct materials are raw materials that are used directly in the production of goods. They become part of the finished product. Examples include wood, used to make furniture, flour, used to make bread, and fabric, used to make clothing. The cost of direct materials is calculated as opening inventory of raw materials plus purchases of raw materials minus closing inventory of raw materials. This gives the cost of raw materials consumed. Direct materials are a component of prime cost. Understanding direct materials is essential for calculating the cost of production. This is frequently tested. Now, let me explain direct labor. Direct labor is the cost of workers who are directly involved in the production of goods. They work on the product itself. Examples include machine operators, assemblers, and production line workers. Direct labor is also called direct wages. The cost of direct labor includes wages, salaries, and other employment costs. Direct labor is a component of prime cost. Understanding direct labor is essential for calculating the cost of production. This is frequently tested. Now let me explain direct expenses. Direct expenses are expenses that are directly incurred in the production of goods. They are not materials or labor. Examples include royalties paid to the inventor and hire of special machinery. Direct expenses are a component of prime cost. They are added to direct materials and direct labor to calculate prime cost. Understanding direct expenses is essential for calculating the cost of production. This is frequently tested. Now let me explain factory overheads. Factory overheads are indirect costs incurred in the factory. They are not directly traceable to the product. They are also called manufacturing overheads or production overheads. Examples include factory rent, factory lighting, factory insurance, factory maintenance, depreciation of factory machinery, and factory supervision. Factory overheads are added to prime cost to calculate the cost of goods manufactured. Understanding factory overheads is essential for calculating the cost of production. This is frequently tested. Now, let me explain the treatment of work in progress. Work in progress is the value of partially completed goods. It represents goods that are in the process of being manufactured but are not yet finished. There are two types of work in progress. Opening work in progress is the value of partially completed goods at the beginning of the period. Closing work in progress is the value of partially completed goods at the end of the period. Opening work in progress is added to the costs in the manufacturing account. Closing work in progress is deducted from the costs. This ensures that the cost of goods manufactured reflects only the cost of completed goods. Understanding the treatment of work in progress is essential for preparing manufacturing accounts. This is frequently tested. Now let me explain the treatment of finished goods. Finished goods are goods that have been fully manufactured. They are ready for sale. The cost of goods manufactured is transferred to the trading account. The trading account calculates the gross profit. The opening inventory of finished goods is added to the cost of goods manufactured. The closing inventory of finished goods is deducted. This gives the cost of goods sold. Understanding the treatment of finished goods is essential for preparing the trading account. This is frequently tested. Now let me explain the difference between manufacturing accounts and trading accounts. Manufacturing accounts and trading accounts are different. Manufacturing accounts show the cost of production. Trading accounts show the profit from buying and selling goods. Manufacturing accounts are prepared by manufacturing businesses. Trading accounts are prepared by all businesses. Manufacturing accounts are prepared before the trading account. Trading accounts are prepared after the manufacturing account. Manufacturing accounts show the cost of goods manufactured. Trading accounts show the gross profit. Understanding this difference is essential for understanding the accounting process. This is frequently tested. Now, let me explain the difference between direct costs and indirect costs. Direct costs are costs that can be directly traced to the product. Indirect costs are costs that cannot be directly traced to the product. Direct costs include direct materials, direct labor, and direct expenses. Indirect costs include factory overheads. Direct costs are included in prime cost. Indirect costs are added to prime cost. Direct costs are variable. Indirect costs are fixed. Understanding this difference is essential for cost accounting. This is frequently tested. Now, let me explain the importance of manufacturing accounts. Manufacturing accounts are important for several reasons. First, they calculate the cost of production. This is essential for pricing decisions. Second, they help to control costs. They identify areas where costs can be reduced. Third, they help to value inventory. They provide information for valuing finished goods. Fourth, they help to prepare financial statements. They provide information for the trading account. Fifth, they help in decision-making. They provide information for management. Sixth, they help to assess efficiency. They show how efficiently goods are being produced. Understanding the importance of manufacturing accounts is essential for understanding why they are prepared. This is frequently tested. Now, let me give you sample exam questions to prepare you for your test. What are manufacturing accounts? Manufacturing accounts are financial statements prepared by manufacturing businesses that show the cost of producing goods. State the purpose of manufacturing accounts. To calculate the cost of production, control costs, determine selling price, value inventory, prepare financial statements, and make decisions. What is prime cost? Prime cost is the cost of direct materials, direct labor, and direct expenses. What are factory overheads? Factory overheads are indirect costs incurred in the factory. What is work in progress? Work in progress is the value of partially completed goods. How is the cost of direct materials calculated? Opening inventory of raw materials plus purchases of raw materials minus closing inventory of raw materials. What is the difference between direct costs and indirect costs? Direct costs can be directly traced to the product. Indirect costs cannot be directly traced to the product. Explain the treatment of work in progress in the manufacturing account. Opening work in progress is added. Closing work in progress is deducted. Let me summarize everything we have covered today. Manufacturing accounts are prepared by manufacturing businesses. They show the cost of producing goods. The components of manufacturing accounts include prime cost, factory overheads, and work in progress. Prime cost includes direct materials, direct labor, and direct expenses. Factory overheads are indirect costs. Work in progress is the value of partially completed goods. Opening work in progress is added. Closing work in progress is deducted. The cost of goods manufactured is transferred to the trading account. Manufacturing accounts are important for calculating the cost of production and controlling costs. Understanding manufacturing accounts is essential for advanced accounting. This is Topic 5 in your SS2 accounting series. Study it well. It is common in essay questions. Well done.